Welcome to the Explainer. We're jumping right into what is, honestly, the absolute bedrock for any new trader hitting the markets. We're not doing flashy indicators today, no secret stock picks. We are talking purely about survival. We're going to break down the architecture of trade automation and specifically why building a rock-solid exit strategy with stop losses and take profits is a literal game changer for your capital. Let's get right to it.
Think about this for a second. What's the absolute biggest threat to your trading capital? Right? You sit at your desk, the bell rings, and suddenly everything is moving. It's chaotic. Lines ticking up, ticking down, red candles, green candles, news alerts flashing nonstop. You buy in and boom, your heart rate spikes. Are market makers out to get you? Is a flash crash coming? Are high-frequency algos manipulating the spread? You're just staring at the screen, literally sweating, trying to figure out what unseen force is actively trying to destroy the hard-earned money you just put on the line. But let's just take a deep breath here. Slow it all down. Because the ultimate villain, destroying trading accounts every single day, it's not the algorithms. It's not the news cycle. It is, quite simply, your own emotions. Panic and greed. Those two feelings will completely hijack your logic. When you hold live, manual trades, panic is going to make you sell at the exact worst moment, and greed is going to make you hold on way too long.
Okay, let's dive into this, because the cure for that overwhelming anxiety is actually pretty straightforward. It's the automation of emotions. Our source material makes this the absolute core thesis of any successful exit strategy. You see, you can't just flip a switch and turn off your human feelings. You're going to feel fear when a trade tanks. You're going to feel greedy when you start seeing green. The trick isn't pretending those emotions don't exist. The real trick is building a system that just doesn't care how you feel. We are going to automate your emotions out of the equation entirely. This contrast really hits the nail on the head. On one side, you've got the manual exit. This is that stressful reality where you're glued to the chart, trying to make split-second decisions with adrenaline just dumping into your system. You're driven by panic, or maybe greed, second-guessing yourself at literally every single tick. But on the other side, the automated exit. This is driven by predetermined parameters that you set when your mind was calm, rational, and logical, long before the trade even went live. It's basically the difference between trying to stitch together a parachute while you're free-falling versus packing it perfectly before you ever leave the ground. So, let's move to our first specific risk management tool. And honestly, guys, this is about to become your new best friend. Tool number 1, the stop loss. If you're going to survive as a new trader, you have to understand this, and you have to use it on every single trade. By definition, a stop loss, or SL, is a mechanism for protecting your capital by exiting a losing trade automatically. You can think of it like yanking the emergency brake on a runaway train. Or even better, picture an acrobat way up high on a tightrope at the circus. They might slip. In fact, gravity pretty much guarantees that eventually everyone slips. The stop loss is that physical safety net rigged right underneath them. It catches you. Yeah, sure, the fall might sting your pride a little bit, but that net catches you before a completely fatal drop wipes out your whole account. I really want to emphasize the most crucial word here, automatically. It protects your trading capital automatically. It cuts losing trades short automatically. When the price hits your predetermined line in the sand, boom, the system sells your position, period. You don't have to scramble to click a button. You don't have to sit there debating with yourself. You're not paralyzed by fear, just praying the market magically turns around. The entire panic response is physically eliminated from the process because the software is handling the exit for you. But hey, managing fear is really only half the battle. Now we need to shift gears and focus on managing a trader's other worst enemy, greed. And that brings us right to our second vital tool, the take profit. A take profit, or TP, is defined as locking in your gains at a predetermined level. Imagine a farmer, right? They've spent months growing this beautiful, perfect field of corn. But instead of actually harvesting it, the farmer just leaves it in the field, hoping it grows just a tiny bit bigger, until eventually the whole crop rots. That's exactly what traders do when they don't take profits. Or think of a gambler turning $100 into 1,000, but refusing to cash out while they're ahead, and eventually handing it all right back to the house. The take profit is your automated instruction to harvest your crops. It secures the win. Now, what's really interesting about this is where these two tools combine to create the secret mathematical foundation of long-term market survival. It's what we call the 2-to-1 survival math. Let's visually anchor this concept. Think of your stop loss as one unit of risk. Let's say, for example, you're risking $50. Now, your take profit represents your reward, and that needs to be exactly twice the size, 2 units. So if your stop loss is set to lose $50, your take profit absolutely must be set up to make $100. For this exit strategy to actually be effective, your predetermined take profit has to mathematically double the size of your stop loss every time. Why is this so vital? Well, because this specific ratio is the ultimate defensive strategy. It perfectly offsets those unavoidable market losses. Just look at the math here. If you have a 2-to-1 ratio, you can actually lose half of all your trades. Literally, you could be wrong 50% of the time. But because your automated winners are twice as big as your automated losers, you still come out ahead. It relies entirely on cold, hard, mathematical probability, not luck. This right here, this is the architecture that keeps professional traders alive in the markets year after year. So the crucial point is how you practically apply this to your daily trading life. It all comes down to a strict 4-step chronological routine. Step 1, you enter the trade based on your analysis. Step 2, you immediately set your stop loss to protect your downside. Step 3, you set your take profit at exactly twice the distance of your risk. And step 4, and honestly, this is the most important part, you literally walk away from the screen. Just walk away. You let the architecture do its job. Which brings us to our final thought for today's explainer. Will you let your emotions drive, or will you automate your survival? Because let's face it, the market doesn't care about your feelings. True market success doesn't come from staring at flashing lights and sweating out every single price change. It comes from building this exact architecture of automation, stepping back and letting the math work for you. Really think about that the next time you open up a chart. Thanks so much for hanging out with me today, and keep learning.